Hi guys, welcome back. So, should you invest in Chinese stocks? What's gonna happen to them in 2021? Today, we're gonna talk about this. Now, that's $1 million questions. Why should you invest in them? Today, I'm gonna show you the thoughts I put together, and hopefully, it can answer to some of your questions about the Chinese stocks you have right now, including NIO versus Tesla. So stay with me and think with me today. And in order to make it less boring, I'm gonna use my very poor sketching skills. And in the end, we're gonna play a little game together. And then the winner can choose any stock, you name it, and I will do an in-depth analysis on it. Before I begin, I really want to show you the reason why my channel has been growing so fast, as I only opened this channel last Monday. And the first one is this: notification click rate. It means how many of you click into my video when you are notified. I know 14.4% doesn't make much sense, the typical on YouTube, which is 0.5% to 2.5%. It means you are actually looking forward to my video, and it makes me very, very happy. And then the second one is this. It tells me that you guys have been helping me to share my video. You are helping me to grow. Thank you so much, guys. I'm very grateful. It really encouraged me to do more and do better. Every like, every comment means the world to me. Thank you for helping me grow. So now, let's begin. May, August, December again, January. So it's really like one bad news after the others. The Chinese stocks you have in your holding is just going up and down, up and down, up and down. Whenever you have hope, it's just one news to smash it back down. When is it gonna end? Should you sell your Chinese stocks just to get the drama over with? Is NIO going to get delisted? First of all, I do think news is up to interpretation of investors. Like I said on Friday, the same news, retail investors are freaked out by the blacklist, but institutions see this. Now I need to clarify that this is not a political channel. I don't like to talk politics. I only care about investment here. People are freaking out, and institutions are eating off our fear. Overall, I think 2020 was really the worst year for a lot of Chinese stocks. And I think the valuation has really bottomed. They barely recovered from the trade war. And then the COVID happened, the delisting news, and now the blacklist, making the evaluation lower and lower. But I really think the evaluation has bottomed out in 2020. Making some really high growth stocks very good deal for us, and it's likely to continue an uptrend from now on. If you have watched my video about my 2021 strategy, then you should know that right now my position of Chinese stocks has increased since last December from 20% to 50%. And because of the recent growth, it has grew into more than 60%. In 2020, I had a really good year, but I know I need a new strategy in 2021 to maintain the growth of my portfolio this year, because I think what grew a lot in 2020 may not grow as fast in 2021. I mean, just look at the FANG stocks. How many people had jumped in at this point, thinking that it's gonna grow the same rate as before? And in the end, it's like this. Because I think when everyone is certain about some things, then the chance left for retail investors are getting limited. That's why I think some of the Chinese stocks I've been recommending in my channel, they really have one of the fastest growth rates with the lowest valuation. And that's why I've been taking all the bad news as the chance to buy good deals. And I know institutions are doing the same thing. The valuation, it's just so low because a lot of investors are trying to stay away from it. They're getting more and more fearful. If we compare the valuation of Alibaba and Amazon, one is 600 billion and one is 1.5 trillion. I said last week that I think Tencent and Alibaba will pass the $1 trillion mark this year because the valuation right now doesn't make sense. Their influence in China is so strong. It basically goes through every single little thing in their life. The cloud service is growing strong. The influence is expanding from China to Asia, Africa, and the rest. Ray Dalio of the famous institution Bridgewater's biggest position of non-ETF stocks is Alibaba. That's why on the day it crashed on December 24th, I bought in Alibaba. And I found out later that ARK Invest did the same thing. They bought Tencent on that day and Alibaba on the next day because they also think the political storm will go away. All the drama will be over. The show will be over. And when we look back, it would make 2020 look like a joke to us in the future. The valuation will be back to normal, start to make sense again. Now, we have talked about the valuation. Let's talk about the growth. I want to share a trend that I have been observing for a while now. We know that China has been the manufacturing center of the world for a while, for decades now. But in the last decades, they're having problems. The labor cost was getting higher and higher, making a lot of international brands who used to outsource to these manufacturers actually thinking of moving out of China and move to where the labor cost would be lower, which is South Asia. At first, they were just thinking about it, maybe planning it, and then the trade war came, making it more difficult for the export. And then the COVID-19 kind of just speeded up the process of them moving out of China. Now, this is a big problem. When the big brands are slowly starting to move out, they're going to have this excess of manufacturing capacity, and tens of millions of people will lose their jobs if this continues in the future. Now, what would you do if you are the Chinese government to solve this problem? I can tell you what I would do. If I were the Chinese government, I would do this. The answer to me is Chinese brands to solve the problem of excess of manufacturing capacity by increasing the domestic demand. Now, I know what you're thinking. Most people, including myself, have the image of Chinese brands like this. Cheap, ugly, low quality, and copycat. First, issue of the quality. First, the quality after years. So a lot of the international brands in the past were manufactured in China, including Apple, Dior, L'Oreal, BMW, Audi, Armani. So many brands that are worldwide famous had really helped increase the quality of the manufacturing as well as the supply chain. So their quality has gotten much better over the years. So when they want to do their business from B to B, change to B to C, they have the advantage of quality and price. But brands need more than quality and price. To me, what's more important is the culture. The culture, it's more of a problem because most Chinese people don't like Chinese brands. They buy it because it's cheap, but it's not a proud thing to have. Like you walk out on the street with a Chinese brand purse, people think you're cheap. So buying brand items is really a consumption of preserving face. So now, if you are the Chinese government, what would you do again? It's very hard to change a fixed perception for decades. But if it's me, I would start with the young people, the millennials. Because they didn't have a fixed perception yet, they are like a white piece of paper. They are going more and more into workforce and becoming the rising high-end middle class with more consumption power and a lot of disposable income. So how to make them love the Chinese culture? Since a few years ago, the National Museum, 故宫博物馆, has already started the rebranding. They are really trying very hard to speak young language, engage with the millennials. They have been making a lot of these Chinese cultural products. This is the way they are making a lot of millennials fall in love with the Chinese culture. And I can see them changing over the time. This kind of proud to be Chinese, proud to wear Chinese brands, proud to show off their Chinese brands. This is the way the government is trying to help Chinese brands grow. And it's really benefiting brands like NIO, Xiaomi, YSG, the brand Perfect Diary, and HMI, which is Huami, even Baidu and EH. Because all of these brands, they are making use of the manufacturing capacity. At the same time, making Chinese brands more cool and more attractive to people. This is speeding up the trend of the culture and perception change. And the government support them 100% because they align with the strategy. And you know, among this, who is really important here? It's Alibaba. Because it's really speeding up the process of Chinese brands reaching consumers, which is why I was not worried at all about what the government would do to Alibaba, because at the end, it's just like your left hand hitting your right hand, and it would never hurt. This is why I think these Chinese brands will take more and more market share from the worldwide brands who have big exposure in China. But I'm not so worried about Apple and Tesla. I'm a huge Apple fan myself. I use everything from Apple. For now, Apple and Tesla will always have a spot in China, especially Tesla, because the government needs Tesla's help to continue to help shape the supply chain of EV manufacturing in China. So YSG, it's a startup makeup brand. It started around 2017. It's really catching up the trend of the millennial starting to love more and more the Chinese culture, trying to make Chinese brand more cool with its aggressive marketing and the massive collaboration with KOL. The speed of its growth is beyond everyone's imagination. In 2019, the Double 11 sales event, which is like the Black Friday event, the biggest sale event of the year, it is the first Chinese brand ever that could take the champion from L'Oreal, passing all the American and European brands, exceeding 100 million yuan sales in the first 28 minutes. And then this is Huami. It's a smartwatch except much cheaper. They are also the supplier of Xiaomi, but right now Xiaomi's smartwatch sell a lot more than Huami. So working for Xiaomi, it's their B2B model, and doing their own brand is their B2C model. And because most of their sales come from Xiaomi, which is a lower margin of business, so that's why it has been getting a valuation of a manufacturer. But I really disagree. I think the real potential of Huami is not out yet. Right now, their market cap is around 800 million. With their revenue of 840 million, sales growth of 52%, which is quite high. So it's considered a high growth company. With the PE ratio of 10, price to sale ratio of 0.9, and currently holding cash of, last time I checked, it was 300 million. which doesn't make any sense to me. This is why I think Huami is really a high growth and value company, especially as they grow more on their B2C business, which is their own brand, Amazfit. The margin should really get higher. And why I value this company, it's not even their sales from the smartwatch, but it's the data they are collecting with the smartwatch, including sleep quality, exercise, and heart rate. I think it's gonna grow into a much more valuable business than the smartwatch itself. It can grow into a completely different business model. It can work with online healthcare. I can see in the future that the online healthcare provider would directly ask the patient for this kind of data or advise them to purchase this kind of wearable device, or insurance company would do the same. Another evidence I have is that the CEO really insists to have the same chip on all the device in different price range, which can range from 200 yuan to near 1,000. He insists to have the same chips inside because he needs to make sure the data collected is consistent. This would hurt the margin of the business, but it just tells me that he focuses on the data more than the smartwatch business on itself. This proves that he has this vision of the company, and I really like that. The data will be more and more valuable in the future. I think Huami has been beaten down a lot in 2020. One thing is the coronavirus. It stopped Huami from exporting to a lot of countries. But from the last earnings call, I heard that they're starting to catch up. They're starting to pick up more of the international sale. And the other thing is that every earning report, it's lower than the estimates, and not just a little bit. Sure, the coronavirus did not help, but I think it's also the CFO. I think he didn't do a good job to alter the estimate according to the coronavirus situation. But based on the last earnings call I heard, they have replaced the CFO. So I'm hoping the next earning is going to be less of a bomb. Because so far, the earnings were really not doing them a favor. But I think it's because of this that it kind of set a low expectation of earning for investors now, which is why I think I'm okay to buy before the next earning, which is estimated to be in March. And then you look at the monthly chart. You can see the share price has really been stagnant for 3 years. So some of you commented and said that this kind of chart really turns you off. So I want to explain a little bit why I find it interesting. So even though this has been stagnant for 3 years and it has been beaten down many times, a lot in the past, it still continued this slight uptrend, continue to make higher low. So I think this is not the chart that institutions are not buying in. Let me show you an example. This is a chart that institutions were not constantly buying in. Because if it's just retail investors, they would sell out slowly. So that's why this chart doesn't look like a chart that only retail investors are buying in. And I think with all the political issue and the Chinese trend that's going on, if me by myself can think of it, I think institutions would know it too. They have a whole team of smart people. Which is why I even bought a call option that expires in 2 weeks. And I'm up 114 and 160%. The share price has been stagnant for 3 years, and I bought a 2 weeks call option on it. This is how much confidence I had, because I normally don't do call options. Option play is very, very risky. Most of the time, it's expire worthless. So I only do it when I'm almost 99% sure. And same with YSG. I also bought it, did expire January 15, and I'm up 300%. And you must know where I bought it by now, with the help of the news. But I think Huami is a stock that you need patience because you don't know when exactly it's going to explode. So what I do is I buy in regularly, and I won't buy all at a time, so then I don't lose too much opportunity cost with the time. I think it really has so much room to grow. Even though it's at 30, the company is still valued cheap. It's still a good deal. But for me, I think Huami has a good business. It's gonna be more and more needed, and right now it's totally under the shadow. With the pandemic going on, the economy is not going so well. This kind of affordable wearable device could be useful for many countries. That is what I think. So that is my 2021 strategy. To me, I'm very happy. I found so many great opportunities to buy some companies that I really like with a good deal. I had so many Black Friday events because of the news. It's an easy answer for me, and the way I think of what institutions are doing just gives me more confidence. I see a lot of big YouTubers talking about Chinese stocks, like for example, Jeremy from Financial Education. He says there's a reason why he doesn't invest in Chinese stocks. I love his channel and videos, but I'm afraid I have to disagree with him on this one. There are a lot of great companies. For example, EH. I think this is too big to miss. I think Yihang can revolutionize our life. I think EH is my #1 favorite Chinese stocks in terms of growth for 2021. And I think he doesn't know what he's missing for real. So if any of you watch his show, please let him know that he's missing something really big. I think the best way is really to choose the best out of both. For example, Chinese, I would really invest in their drone, AI, the EV, and the solar energy. And then for American, I would go with the health tech, the genomic, the esports, the 3D printing, sports gamble, and MJ. Let me know what you think about Chinese stocks, whether you have it, and how much does it take in your portfolio. I think some of the Chinese stocks we mentioned will have a very good year coming. And I actually think the word Chinese stocks is gonna be one of the hottest search keywords on YouTube in 2021. Just like penny stocks and Bitcoin right now. We will see together. I think opportunities come when there are uncertainties. Okay, now I have a game for you. I am eager to tell you about a stock that I invested in 2020. I have made quite some money with it, and I think it will continue generating cash for me. Some people like it, some people hate it. It's kind of controversial. It used to be a penny stocks, but not anymore. And you need to guess which one I'm talking about. Write down the ticker symbol in the comment, and also write down which stock you want me to do an in-depth analysis on. If you write multiple ticker symbols, I will only count the first one. And if it's the same guess, I'm gonna pick the one with the most like. And guys, if you have listened up to this point, you should really call yourself a thinker. Give me a like if you will. Thank you. That's it, guys. Hope you can find my video helpful. Make sure you subscribe to my channel and give me a big like. Thank you.